about $2,500 on oil. So I was wrong in terms of, I was right in the initial direction, but we failed out on the daily. And I said, I'm getting out of there. And I'm glad that I did, because that thing has continued to roll over. I like oil to the long side, but I need the technicals to show some signs of life, because right now technicals look straight bearish, at least for the moment on Bitcoin. Guys, we're going to bring in Chris Pulver to the conversation. I left him hanging this morning, so let me bring him in here. We are down. What's up, Chris?
Good morning. How are we doing?
I told you I'm down a producer this week, so it's just me behind the studio.
All good, man. Yeah, I was just hanging out.
No claims this morning.
What are your? Looks like the economic calendar has a tentative non-farm, or not even on the Bloomberg economic calendar. So I don't think there's going to be a non-farm announcement tomorrow.
I don't think so either. And meanwhile, market just melts up anyways.
Yeah, why not? Why not? Just go to all-time highs.
By default, we go up 0.5% every day.
Yeah, yesterday, I survived by the skin of my teeth yesterday. I had a 67.15 bear call spread, and that was filled. Took that right into the close. Was like doing a live session right into the end of the day, and it ended closing at 11. So I had two winners, 15 by 25 and 15 by 20. Those are bear call spreads in SPX, and they worked out. Well, but not exactly how I like to finish the day, which is like, please stay below 67.15.
Right. You're like, just don't go past that level.
Yeah. It was the price action yesterday was double what the market makers had provided. So it was like a plus or minus 30 on the day. We had a low around 66.56, which is right around this positive gamma support level. I can show you right here. So yesterday, trying to think. Well, fudge. Well, it'll be similar to this. So this today, that level is 66.95. So if we open up a little bit higher, we have futures up around 0.27. Yesterday, we came into the futures market down 0.4%. So the open yesterday was down here right at this gamma support, and it just went up all day. I thought we would stall, but it's almost like once the ceiling is broken, everything just can drift higher for free. It's just like there's no resistance. And I just think we're in open space. There's no resistance. We've had 29 all-time highs for the year. I don't know where this is at all-time, Nick, but while we're talking this morning, I'm going to try to find out, because I think it's top 10 ever of like all-time highs for the year. I've got a screenshot of it.
We've had just a ridiculous, I think it's like 30 plus, right? Like something really high in terms of number of highs. Yeah, I was just saying, Chris, before you joined, it's been a bit of a frustrating last few months, simply because, if you're in these moves, you're rejoicing, you're having a wonderful time. If you're on the sidelines, or like in my case, where I'm kind of cash heavy, where I'm not super invested in it, it's been a little frustrating, because we've talked about this over and over, and eventually we will be proven right, just a matter of when, in the sense that we like pullbacks as traders, and when you don't get them for a little while, it is normal for everybody who's watching right now, who's like, I'm frustrated that gold and silver is not pulling back, or the S&P 500 is not pulling back. You have pretty much everything at the highs: real estate prices, stock markets, gold, not just US stock markets, by the way. We've got a global stock market run going on. It's frustrating when you are not like, in these moments, you're like, dang, why am I not just fully invested with a little bit of leverage across the whole, matrix of asset prices? But we also know that doesn't last forever.
Oh, and I was going to say too, if you and I feel that way, we know that it's probably a time to be cautious, because the market always makes you feel that way. It'll never make you feel comfortable.
Never.
There's always a cautious bullishness. There's always how bad is this correction going to be? Like we saw back in March and April this year. But that's kind of the market's job. And I think what continues to drive this market higher is, we've talked about this, but the pain trade is to the upside. Sentiment keeps printing terrible prints. Like University of Michigan sentiment is still nasty. University of Michigan inflation expectations still nasty. And I know some people are suggesting like, well, that's because it's a Democratic survey. Whatever, dude. What it is showing is like, if the bears won't stop publishing how bearish they are, this market's going to keep crushing them to the upside. And it's just going to be this death by 1,000 paper cuts, all-time highs, all-time highs, all-time highs.
Let me show you this too,
yeah,
Chris.
go ahead.
Here's the other pain trade. Okay, so I played around with this last night. I'm kind of excited to have this data. This is seasonality of the S&P 500, 10-year historical average. And we have ignored, I mean, in some ways, we've had some pretty consistent with history seasonality this year. Like, for example, you have the initial push in the market in the year, and then you had a little bit of a slow period in February and March and April, which we saw. The red line, by the way, everyone, is the year-to-date performance of the S&P 500. We can also do this study for gold, and maybe we'll do that in a second, and other markets. But you know, I love having this data because it shows you, I mean, seasonality is a strong force in markets.
Yeah.
And what we see here is that we have pretty much followed in suit with the historical pattern pretty strongly this year, except we did not get the pullback that I was hoping for, and I think a lot of traders were hoping for during the August-September period. And what we can see is this is the expectation in terms of you're just trading seasonality. You typically get sort of a pullback in those periods. We have seen instead the stock market continue to go straight up. And then now you have this weird penguin on the edge of a cliff moment where here is the last leg of the year, which historically is like the best part of the year, that fourth quarter rally. And so everybody, I think, on the professional money manager side of things is staring around the room, looking at each other and saying, are we really going to underperform so bad and show clients that we were not holding any of the winners this year? And so that's kind of the at least the justification for the seasonal run that we typically see at the end of the year. So the question I have is, are you going to get seasonality, ignoring it here going to the upside and just going with it here? Or are you going to see, you know, sort of a fake out? Did we pull forward that last quarter's kind of usual performance? I don't know, but I figured just kind of an interesting thing. If you were going off seasonality alone, this thing can continue.
I agree. And honestly, like I said, that's the pain trade. It will be, I don't know if the market limps in, you know, the end of the year, because the last couple times, I think 2023 and 2024, the Santa rally technically didn't exist, or it didn't fulfill. That is the I'm trying to think what the actual technical Santa rally is. It's not right after Thanksgiving. I kind of look at that as like the December drift, but technically it's right. It's like Christmas Eve to New Year's Day. That little 7-day window is considered the Santa rally, and it was negative last year. It was negative in 2023. We've had a pretty good run. I think sector wise and year to date wise, S&P is up 14.1%. I've got to say the Nasdaq's got to be close to 18 to 20% year to date. These are sectors. I mean, technology is back again, leading the way. Communication services leading the way. Communication services led heavily by your heavyweights, Meta and Google, Netflix. So there's your big win there. And then tech leading once again. Consumer staples, another reason that shows like people aren't worried about a recession. Consumer staples are the worst performing sector of 2025. So, I mean, I don't know, man. I think it's silly to be a perma bear, but I do think that it is just really important that this isn't a time where you want to say, well, if you can't beat them, join them. Go all in at these highs and just ride this thing up, because it will pull back. I mean, gold is a good example. We're going to have a 15 to 20% correction in gold. We will have a 5 to 10% correction minimum in the stock market. We will. I mean, if you think about this run up through, I mean, I'm not going to compare 2025 to 2020 or 2017, but that melt up, that persistent higher highs through 2017, we had a volatility event in 2018. I went ahead, you and I talked about VIX yesterday. I did take a VIX trade yesterday. Yep. Okay. So it's not looking good.
So
I went
Chris,
out to November.
You want to join the pain trade with me? I mean, I'm sitting here.
Well, look, dude, I'm getting like fresh year to date highs. I mean, I had a huge jump yesterday. I was up to 600,000. This would have been Monday's close. Monday's close 600K. Today I'm at 668. Like, I'm only participating in this melt up. Like, I'm not really at these highs, buying these highs. I'm doing puts and I'm doing ratio spreads and I'm doing income trades that just continue to feed additional gains. So I'm just trying to stay out of the way. I mean, if we're going to have a correction, I'm trying to absorb that correction and still generate good trades and income. But it's been crazy. And a big surge would be, Bitcoin's turned around nicely the last couple of days. If that gets a strong rally, gold and silver haven't been stopped. I am a little sad that I will be trimming sooner than later. I mean, we're at 47.82 spot price in silver, 49 to 50. I've got to be responsible and trim the position. I've got to be, I probably have
gotten
3 times
a good
the
size for you. Cause that's,
three times the
crazy
size
move. Yeah.
So silver is a much bigger position than gold. I will probably maintain my gold, but silver I will trim back because I have like 3,000 or 4,000 shares of silver. I went long in this one. I've been long since COVID, but then started to stack in and add a lot more to silver as this thing has been running. I also don't think we're done, dude. I think that this, if anything, this is a wave 3. If we go from COVID lows 1, 2, this is a long wave 3. And I would say if we have a 4, I mean, if it pauses at all-time highs and keeps going, that'd be insane. I think we still have a pullback that could be, I don't know. I think there's double-digit pullbacks waiting, dude. I think gold and silver pull back double digits, but Bitcoin's now getting a run. Risk appetite seems to be here. Futures are up another 1% today. The levels I'd be watching intraday, 67.40, 67.50 if this market just melts up. No data tomorrow. Give me some thoughts for the last couple of months. This market has pulled back. Even though they've been minor pullbacks, every time we poke new highs, it has pulled back since the end of July. So I don't think we rip too much higher without having, maybe another 1 or 2% correction. And of course, everyone's wondering, is this the time that it pulls back 5% or 10%? I don't know.
Yeah, no, I'm with you. And before I get back to S&P, I just want to, because I promised this chart, here's gold seasonality as well. Year to date, it's been a phenomenal run up for gold prices. You can see in terms of end of year, we tend to just kind of go flat for gold. So just something to keep in mind for the gold bugs out there. So I would not be surprised if, you've had these, you're talking about, maybe taking some profits off of your silver trade. I imagine it's likely a similar chart for silver. Let's see if we have that data. I think we do. Yeah. So similar chart for silver. So if you're talking seasonality, I mean, phenomenal run up. Silver and gold, by the way, going back the last, 10, 15, 20 years has actually done really well in terms of comparison to the S&P 500, which has been pretty awesome. Bitcoin seasonality, somebody just asked for in the chat. Bitcoin, yeah, I mean, this is an asset that's just done nothing but go up in the last, you look at this, it's like averaging some insane numbers in terms of annual performance. Bitcoin, kind of sees a continued drift into the December month. So we'll see, but just worth keeping an eye on that seasonality. But in terms of, taking some profits off of the metals, if you are long, I mean, I think it's a wise thing. Personally, I think macro wise, we've lost a little bit of the story for, the at least on the US economic data side. I mean, there's still a million reasons why I think gold and silver are cheap on the longer term. Like, I think that they still have plenty of room to go up over the longer stretch. But I do think you're due for some pullbacks on most things. And it wouldn't take much to kind of topple things over for the short term to get that 5, 10, 15% pullback in metals or indices, et cetera. But a lot of the economic data that came out, yes, the ADP number was awful, but job openings, and again, we didn't get the jobless claims for this week because they got delayed, but last week's numbers were good. Job openings were a little bit better than expected. We won't get the NFP report. In terms of unemployment rate, we're still sitting at 4.3%. So to me, it's not like a panic in the economy that's going to continue to bolster metals prices. That's where I think you could just get a little bit of a pause in terms of the macro. I don't think it supports just, if you had like jobs data, and we won't know until we get that NFP report. If you get the NFP report and it's crashingly worse than expected, then yeah, metals can keep going higher. But we'll see what happens with that when we do get that data point. Maybe it'll get pushed back to next Friday. Just depends what happens with the U.S. government. In terms of stocks, again, the challenge here is I do actually think the macro now supports some, soft landing stuff. You still have, yes, not great jobs data, but you have GDP above expectations by a long shot. Manufacturing PMIs slightly beat yesterday. Services PMIs, I think that will, I'm not sure if that will get delayed due to the government shutdown stuff. Retail sales were strong. Inflation, not in a great spot, but not in a devastating spot either. You're sitting at 2.9% CPI. PPI 2.6, PCE 2.9, wage growth still 3.7. That is at least above inflation. So consumers holding up okay with that front. So that's just a quick overview of the macro for those who are interested in that sort of thing. For me, what that supports is that, look, from a price action perspective, I think we're a little stretched. From a sentiment positioning perspective, I was doing this just before you came on, Chris, just looking at the AAII, which we got last night. Where's that at? There it is, market sentiment.
More bullish.
Slightly higher in
Yep.
bullish sentiment.
Yep.
Still, though, the challenge I have here is that this is still not at euphoria levels. You still have a good crowd of bears out there. Rising bullishness, falling bearishness, put to call ratio. I talked about this earlier, towards the low end, which is showing, again, big call demand. So, this is where I do think you're due for a bit of a pullback, but it would be a dip that I'm looking to buy until shown otherwise.
What's the I mean, we can look back at these recent lows, 65.70, 65.50. That is the post FOMC low. So I mean, I think this is one of those situations where it's better to have the umbrella now than try to buy it when it's storming, because if something really flips and we take out this 21 period moving average, the ability for this market to drop. I mean, now that we are up to some fresh highs again, and we are 230 points above the 50-day, we're 3.5% above the 50-day. I think this is a correction that happens at some point. I think the hard part is, can we trade it? Possibly not. I think the best way to trade it is either one, have some VIX hedges. I think that's a good way to maybe get some short-term volatility to benefit. And then a dip that pulls back, let's say 3%, 5%. I'm in a position for bigger dips. I'm not really going to jump in and just buy unless it's like risk defined. But a 21 period has been holding up literally since we turned the corner back in May. The 21 period has provided support ever since. And so, if that gets taken out and price closes below the 21 period moving average, mine's an exponential moving average, closing below that opens up room to 50. 50 closes below that, opens up to 100. That's when things get a little nastier. But remember, a 40+% rally, and I look at this, I'm still changing my fib here, by the way.
Yeah.
This fib, and I'm trying to I guess this is a top, but it is a big space from a low to a high, pulling back 23%. That's a very shallow fib retracement. 30% is a GAN level. But it does make sense where at some point when it takes out the FOMC candle or comes back to the, I don't even know what this gap was here. None of it matters at this point. We had a July-August pullback and it's just higher, low, higher, low, higher, low. It's been higher lows. But if we take out the FOMC candle low, which is 65.50, off we go. I'm just surprised that it just refuses, man. This market refuses. The stuff that I'm watching every day is if this little green button stays green, then we are in a positive gamma environment. And what that is every put is sold and every call is sold. And that favors the skew of the market is going to drift higher because there is so much intraday support. Everyone is just selling puts instead of buying puts. If you buy puts, that's when you start to see the negative gamma kick in and things start to topple over a little bit. But I mean, I saw this during FOMC. I've seen this where the market's been surprised. We just see in crazy amounts, 0 DTE flows that they just stop the market. They stop the market bleeding and they just buy the dip on a 0 day. And I don't know if it's a retail crowd. I don't know if it's market makers, but it's amazing how much volume comes in on a 0 day basis when the market is down. It's just buy the dip. It's crazy, dude, until it's not. But you can't fight it. Don't fight it. Don't be silly. Don't invest at the highs. That's the hard part. It really is. It's a peculiar market, man. I mean, I hate sounding like I'm bearish because I'm really not. I'm enjoying the melt up like we should be, but I'm certainly not as aggressive as I wish I would have been. But sure. my nature is, once we got into July all-time highs, I'm like, all right, August, September, let's kind of put the brakes on. Maybe we get a stall. Market didn't stall. September completely surprised me with how, September finished over 4% positive.
Yeah.
That's one of the best Septembers I've ever seen.
Yeah, no, it's been a weird sort of just relentless upward move. And it is very much a similar type of market to 2017 where, you had this huge bout in volatility, this huge surge in volatility. that just withered away and died, like completely evaporated, and VIX is back down to the lows. Again, I don't think you should fight it either. I don't mind the idea of hedges, which is, buying some out of the money VIX calls just in case you do get a pop in volatility. And it will happen. I mean, that's the thing with this stuff is we sit here, this experience we have as traders, we go around in a circle where it's like, oh my gosh, this market never pulls back. And then suddenly you wake up and the market is just every day down, down, down. And it's like, you said it earlier. I think it's really true. As traders, you never actually feel comfortable. Like when the market's actually going down, you're like, oh shoot, well, actually now that the market is going down, is this the one? Is this the down that where we're actually not going to just snap back up?
Yep.
So that's you never feel comfortable as traders. And that's why trading it's not for everybody, because it's really difficult, because you're sitting here and you're like, do I just buy this thing before I miss out on more gains? Or, when the market does pull back, you start wondering, well, is this the pullback that's going to turn into an actual bear market that's going to be, multi-year faceted? So all you can do, and this is, my approach to it, is be systematic with our stuff. I find a lot of, confirmation in building a plan around the macro, building a plan around the positioning, and letting tools to help me kind of decipher what's the environment that we're in right now. Right now, we're in an uptrend. That can change. But right now we're in an uptrend. And so I look for dips, I buy dips. And when it doesn't work, I will get out of the way as constructively as I can with stop orders or hedges or building cash, etc. But at these levels, I'm not chasing it. I'm just building cash and being patient, because all we can do is sit on our hands and wait for dips and pullbacks. Because if you're chasing this, the issue is, if this is the top in gold, and we do get that 15% correction, that's going to look normal to the people who have been waiting for pullbacks, but to you, it's going to look like a disaster.
Right. And I mean, there's all sorts of ways to draw out the bigger technicals. I mean, I think we talked about it this week. The market right now, based on the support, we have two key support levels. Go back to COVID, go back to 2022, go back to 2025. There's clearly support. If this market turned hard and just dropped straight down to support, that's a 20+% correction. It's still a bull market. April lows, I mean, we know we're not going to get there in a straight line. I think the market, globally speaking too, it's like the U.S. stable is good for the global economy. If the U.S. is going to turn over and everyone's like, oh, the U.S. has no idea what's coming, then the world doesn't know what's coming. It's like right now there's fiscal spending in China and Europe. The U.S. fiscal dominance is, I've said this, is almost neutering monetary policy. It almost has very little impact, because the Fed, Powell could, I mean, the market might not like it, but Powell could be like, we're not going to cut. I don't think the market really cares, but they are cutting, and they're going to cut. It's like a 99% chance they're cutting in October and an 80-some% chance they're cutting in December. So the three cuts, it's like, is that fueling this melt up still? Maybe it's, but there's only 5 cuts going out from, we started the cuts in September. We're going out to December 2026. There's 5 cuts that are being baked in. A lot of it was baked in. I just think now we're in like a no news is good news situation, because literally there is no news, because we have a government shutdown. So we're not releasing key data points every day. And the market's like, nobody's telling us that the job market's bad, so let's keep going higher. It's weird, dude. I'm saying it's weird, but enjoy the melt up, trade cautiously, trade like strategically, and just be accountable. I mean, I want everyone to have gains, but the one thing that makes me nervous about this is everyone looks good in a bull market. Bull market geniuses are everywhere. Everyone looks going to bear in a bull market, but it's it's what happened during 2022 when people didn't survive. It's what happened during March and April. If you were leveraged to the teeth and you were down, the emotional pulls would be down 50-60% versus a 20% pullback. And now, I mean, it's just one of those same things where we're at highs. I mean, every possible indicator I could see is overbought with divergence. It's just a warning sign. It's an anticipation that technically we're due for at least some sideways. I mean, that we don't have to go down, everybody. We can just go sideways. But the fact this market just goes higher and higher and higher every single day is a little strange, because it just means that we haven't stopped directionally at all. We haven't stopped this entire year. This whole year has been directional. Because once we started rollover in February, it was 2 months of straight down. We pivoted in April, and we have been straight up for 5 months. And it hasn't gone anywhere but either straight down or straight up. And that is a crazy market.
It certainly is. Well, Chris, we got to run. We got our next show, and you've got to run too. So for everybody who enjoyed Chris Pulver's commentary, you can find him on his socials. Just search up his name, Chris Pulver, or Chris Pulver Trading on YouTube, I believe. Find him there on YouTube or on socials. You can connect with him, find out more. Chris, thanks very much for coming on, man. Appreciate your time.
Thanks. You're a great one-man show today.
Yeah, thank you. Appreciate it.
See ya.
See ya. All right, guys, give me just a second. I meant Chris made the joke. I'm a one-man show because our producer is he's on vacation. So I am manning the system here. And up next, helping me with the operation is we've got FX James to talk some market setups and ideas. So stay tuned. We will get him in the show here. I'm just looking for my, here we go. All right, right after this quick break. You got James after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How are you guys doing? Happy Thursday. I hope you all enjoyed the very exciting news we had with the unemployment data. Crazy stuff, moving markets all over the place. Crazy volatility. That's complete sarcasm for anyone that doesn't know. Obviously, we've got the government shutdown, so we had nothing, nada. And we're very likely to not have anything tomorrow either, unless we get the news, obviously, that the government's opening again tomorrow. Reopening today or tomorrow before NFP. However, seems unlikely at this point. Bearing in mind, I think we've already discussed the government shutdown and things quite extensively between me, Nick, and the streams and videos and things. But the last shutdown was also under Trump, and it lasted significantly longer than the other shutdowns we've had in history. The previous one was 35 days under Trump, and obviously now we're under Trump again, or the US is under Trump again. So we could maybe see it last a month. Who knows? I'll be honest, don't care. I mean, it's not great, obviously, if we're waiting for data, and then obviously we can't price in or we can't trade the Fed expectations because we've got no data to trade from or to place those expectations. But anyway, let's move on. So I'm in the S&P. I mean, I've shown you this position. I think it was yesterday. I took pound Swiss. I'm not sure if I showed you guys this one, but I'm long pound Swiss. I did. Sorry, I got about 3 or 4 hours sleep last night. I'm a bit brain dead today. So yeah, pound Swiss. This is a beautiful central bank divergence. We've got the Swiss National Bank with 0% interest rates, and obviously we've got higher interest rates in the UK, giving us a really nice carry trade dynamic. So I'm just enjoying the swaps on that one. Still in euro dollar, this one, you know, we were looking at this yesterday. It's just a mess. The only positive is that I'm getting paid swaps to hold shorts, but it's a bit of a mess. I'll be completely honest. It's one of those trades that I'm regretting a little bit of entering this one, just because it's quite literally tagging my entry and then going back to drawdown, tagging entries, going back to drawdown. Not really that fun. Euro Swiss, I'm also long on this one, and I took a euro pound long as well yesterday. Yesterday night. So we were looking at euro pound on stream, and I was actually a little bit against the position. However, I was reassessing it later in the evening after the stream, obviously, and I saw that we did have some nice H4 rejections off our fib. We had a nice level here of what was previous resistance. So you guys should know, if you watch me regularly, I love a break and retest, and that's what this looked like to me. So entered into a long, and I'm just letting this one play out now. I also took a short. This is a bit of a scalp on the pound yen, just taking a short off the VWAP. Nothing interesting there. It's a very small trade, just to see if I can get something running. But yeah, that's it. That's it in terms of my open positions. Oh, sorry, I forgot to mention, I do have a little position here on silver. I'm basically just scalping as we break these highs and catching momentum. Nothing interesting. Nothing to really explain on that one either. So I'll probably book the profits on silver later today. I'm not looking to hold this one. It's not really a swing position. I was sort of contemplating building a DCA. However, I'm very much in agreement with, I think it was Nick also agreed. I'm not sure. I know Chris was talking about a pullback on gold and silver. And yeah, I think that is very, very likely. And I don't want to be caught in a DCA on gold or silver if we're going to see a 10, 15, 20% retracement. That would be very nasty and very difficult to deal with because commodities move very, very quickly. Oh, sorry, they can move very, very quickly, especially on sort of profit-taking dips or large retracements or market crashes, if you will. Same thing as sort of the indices markets as well. They can be very violent to be on the wrong side of, especially if you're a buyer in a bear market. Anyway, Slugmeister says there was no news. Correct, there was no news, unfortunately. Why don't you become one of A1's lead trader? Because I'm not looking for a job. I love A1. I love Nick. I love what they do, but you know, our missions, our goals and approaches are very aligned, which is obviously why I come on these streams. But I don't think they need me. And I don't think I would be able to provide the value that they would require or deserve. Because I do also run my own company as well. That's very similar to what the A1 guys do in the Discord. So it'd be a little bit of a conflict of interest as well. So I don't want to overstep boundaries and all that type of thing. Anyway. Ball out still talking about Nat Gas ball out. Let's see what you're talking. So you in this one? What's your entry ball out? Because I don't know. I love the idea. I really do think we're going to see $4, but I've just not managed to find an entry. I want to say find an entry. Yes, you know, I could have done maybe a DCA, but personally, I'm just not knowledgeable enough on that gas to warrant that type of risk or that type of aggression. And then when it comes to technicals, I've not really seen anything that would warrant an entry on my part. On FX Factory, it says NFP is tentative or we get the release. It's very unlikely that we get the release now on NFP. I would say the US data tomorrow that we normally all love to trade and gamble on, the NFP, unemployment, average hourly earnings, there's a very, very high chance that we're not going to get it. So I'm going to be quite, well, not blunt, but I guess tomorrow, well, for the rest of the week, it's probably going to be very, very boring, especially for major traders, so dollar traders, really. EUR USD almost never works out. Eurodollar is an interesting lady. So the price action can sometimes be very, very good and very, very clear. You can often see very basic technical setups in Eurodollar that do often work out quite well. You know, when I say basic, I mean quite literally just a 50% fib level or oversold, overbought RSI. However, it can also obviously range. I mean, we saw a large range here on the daily. I'm currently stuck in a range here on the H4, on the trade I took on the H4. So it really sort of depends. I mean, Eurodollar obviously moves very, very heavily off news because obviously the euro and the dollar very, very related. So, how many pairs are on my watch list? My watch list is a little bit outdated at this point. I mean, I'm still kind of interested in everything on here, but I'm just not too keen on placing any trades really at the minute. But we've got Aussie CAD, Swiss yen, CAD yen, Australian, in fact, I'll go through the directions as well. So Australian dollar CAD, I'm looking to maybe go long. However, I'm a little bit annoyed at myself. I was long on Aussie CAD. I think I got pretty much the same entry as Nick, actually. So I took a long around here on a fib pullback. So I think this was about 0.618, 0.5 pullback. So I thought, you know, really good trade. Oh, sorry, really good entry. Anyway, we ended up going very, very nicely. I was really happy. It was a great trade. And then we came all the way back to pretty much my entry point. And I was like, after having a pretty strong run to the upside and then a very quick and aggressive move down, I don't want to leave the risk on the table. So I'm just going to close it because I had a good week at that time. I was quite nicely in the blue. So I was like, you know what? I'm not going to push the look. I'm not going to push not going to push it too much. I'll just get out and call it a day. Anyway, we can very clearly see what happened after that. So I'm really messed up on that. And I've got a feeling that I've missed it. So I'm a little bit hesitant to really go back to the Aussie CAD because the move seems to have happened now. Swiss yen, I'm kind of in a mixed opinion on Swiss yen, on where I want to be positioned. So I'm not really looking to do anything. I'm more just watching it for developments, and then maybe I'll make a decision later down the line. Same thing here with CAD yen. I'm slightly more biased to be a short seller because we do have CAD yen with a very bearish reading here on the Edge Finder, which is obviously a great sign. So if I was to take CAD yen, I would need to see a retest on this support level. So this is a textbook setup. This is kind of what you learn in Trading 101. Level of support, we've broken below, we look for the retest, and then we enter short here and look to take it down to the next level. So if we can get that retest, I will be very happy to sell, but again, I'm not overly interested in trying to force anything. Australian US dollar, I was looking at this one yesterday, I think, or early this morning, I can't remember. But again, really nice fib level. We've also created this double top, a slight resistance. But of course, we've got no dollar data, and I don't really have much of a bias on the dollar either. So although the technicals look good, I just can't really justify being a seller, considering that I'm already in euro dollar as well. So that would put me at double exposure short dollar. So it's a bit too risky with the current environment, for me anyway. The pound New Zealand could be a good long position, but the problem I've got with pound New Zealand right now is just the price action. This is a very choppy move to the upside. Although, you know, it was a move up, it just looks like there was a little bit of indecision. So I'm just using a bit of discretion here to just stay away. So there was some people in my Discord this morning actually saying that they were going long here. I just couldn't join them on that one because it was just, yeah, I didn't like, again, just it's discretion. When you've been in the markets for a while, you can generally look at a market and you might be wrong. You know, pound New Zealand could rocket tomorrow, and obviously I'd be wrong. But it just gives me that feeling of I just don't like the look of it. I don't want to be involved with that one. And again, that could lead to me losing profits, but I play it safer than sorry sometimes. Anyway, pound CAD, maybe looking to go long, but again, not overly interested. My pound yen short seems to be moving quite nicely. But yeah, anyway, pound yen, sorry, I'm rambling a lot again. I'm running on a very low amount of sleep, so hopefully I'm making sense. So pound yen, I think I mentioned this yesterday. I'm going to sound like a broken record, but again, this is one of those things that just really ticks me off this week. It's my own fault. Monday morning, it was about 7 a.m. London time or UK time. I was looking at this. I was thinking this is a beautiful entry. I put it on my Instagram. I put it in my Telegram. I was like, this looks good. I made it very clear I'm not taking it though. And I really should have taken it. It's so sad. But yeah, there's that. Then dollar Swiss shorts. I mean, again, very textbook technicals at the moment. We've got a very nice downtrend channel. Moving averages are quite nice. But again, just with the lack of the dollar data, can't justify being really overly involved. Dollar yen, I'd quite like to be a short seller. Missed this short move, and now we're to support. So again, can't justify being involved. So that's pretty much it. That brings me all the way. Dollar CAD as well. Dollar CAD's maybe a long, but maybe that'll probably save that one for when the government reopens and we can get a bit more data. Anyway, I've completely missed all of your messages. So let me just have a quick read of the chat so I don't ignore you too much. VWAP sounds dirty. Yeah, is it Cardi B or is it Megan Thee Stallion? It was one of those people. Ruined that word. Hi James, thoughts on AUD, specifically Australian dollar yen? I think Australian dollar yen is on the Edge Finder. It is. So Australian dollar yen, we've got a score of -5. So let's see if there's an entry or any potential entry. Oops. The problem, I keep saying the problem, the counter argument, I guess, for the Aussie yen, in my opinion right now, is although, yes, the Edge Finder is reading bearish, which is obviously a tick in the short seller's box. However, there's an argument that the Bank of Japan isn't going to hike rates until next year. If we don't get a rate hike in the next decision, we might see some sellers step back in. We might see the yen continue to get pressured slightly. The RBA remains slightly hawkish as well. So we do have a policy divergence between both central banks that would lead me to be a buyer. And we do have an H4 trend that is to the upside. So it depends where your focus is. If you're more of a short-term trader, when I say short-term, I mean sort of day, intraday. I think shorts could make sense, benefiting from the edge finder data. If you're a longer-term trader, I would be more looking to go long, benefiting from the central bank divergence. Leon, hello. Not a fan of nat gas. Yeah, I've never traded nat gas, which is why I'm very, very hesitant. I've been looking at it for ages. Me and Paul have been discussing it for maybe 3 or 4 weeks by now. I've still not pulled the trigger or done anything. What's your opinion on US 30? I don't think I've got an opinion on US 30, actually. Let me have a look. US 30 is not something I trade very often in terms of swing trades. I'll quite often do a breakout trade on New York, but in terms of actually understanding what's going on with US 30, I'm not overly familiar. Is it neutral? Oh, wow. Actually, sorry, I completely missed this. The Dow has got a score of 13, which is really good. So actually, maybe I do want to pay attention to the Dow. Although there's no setup here for me at the moment, I think we could maybe look for a very simple pullback towards the 200, something like this, create a higher low from this, a higher low relative to the previous low, and then potentially look for some sort of break and retest here. You could maybe scale in here, or you could even enter on this retest, depending on your approach and aggressiveness. But yeah, I think something like this would make a lot of sense. Stop at this low. I quite like the idea. Actually, I'm going to leave that on the watch list. I completely missed the Dow. So let me just leave that there. Top trade on Aussie CAD. Yeah, that's the other thing with Aussie CAD. It seems very, very stretched. And we are at this pretty strong level of resistance. Yes, I completely forgot to plug that. Use code ELITE for a discount on the Edge Finder. I do get a kickback. Just a bit of a disclaimer there. It does help me out. Puts a little bit of change in my pocket and saves you a bit of change in your wallet. So there you go. It's a win-win for us both. But yeah, Aussie CAD, I can't justify being a buyer here. The thing is, when you're looking at a trade, the general rule is obviously if you're either in a trade already, you should ask yourself, would I still take the trade? Now, there's a point like this where I've missed the trade. And I'm saying, do I still want to take the trade? Objectively, not anchoring onto what I previously wanted to do, which was buy, and which is what I did. At the moment, I've got no interest in being a buyer. Although I think the fundamentals are still pretty supportive, technically, I think this would just be a FOMO buy at this point because, again, we've had the move I wanted to see already, which I missed. And now we're at a pretty relevant level of support, of resistance. So it just doesn't make any sense, really. My outlook for Eurodollar in Q4, that could go either way. Now I'm going to show you something, and this is super, super secretive. It's super cool. And it might, and it's a big might, make some of you guys millionaires, maybe even trillionaires, depending on how much leverage you decide to use on this. Obviously, again, I want to clarify that's a joke. Please don't do that. If we go to Eurodollar on the monthly, I think I might have actually shown this before on this stream, I'm not sure. But Eurodollar is at a really interesting level on the monthly. Bearing in mind, the dollar is also at a very interesting level on the weekly and monthly with this decade-long trend line. So depending on your views, your forecasts and things, we could maybe see Eurodollar start to take a bit of a dip because we are coming into 3 previous highs. I mean, it's actually a slight downtrend here, really. And even that works out quite well with a slight rejection. Anyway, we're coming into the 50, or actually we just rejected the 50% retracement level. Now, this is also a previous support back from sort of 2010, 2012, and 2008. So we could maybe be looking at the top of Eurodollar for the next sort of couple of quarters. Now, am I going to trade that? Probably not. But it's something interesting. I will be paying attention because if we do get something to really drive the dollar, whether it's a hawkish pivot from the Fed or even just better data from the US, I think we could maybe catch something really nice on Eurodollar to the downside. Now, again, I want to just clarify that's a big I think and if. That's not a definite, and I'm not placing a trade on that just yet. Sounds like I'm just rambling. Well, if I'm rambling, at least At least it's about markets this time, and we're not rambling about something completely off topic like we sometimes do. For the past 1 year, I'm doing small amount trading. It's profitable. This time I want to start a big amount, but I have fear of losing. Ashwin, that's completely illogical and a bit silly. And I mean that from a place of love and support, not from a place of being mean. What I mean by that is if you have been doing it with a small amount and you're profitable, there is absolutely no reason you can't do it with more money. The only thing that would stop you doing that is your fear of losing, closing trades too early, blah, blah, blah. So all you need to do is just rinse and repeat exactly what you're doing now with small money, but with larger money. Just completely ignore the numbers. I don't ever look at numbers when I'm trading. Like here, you can see it's always set to pips. There is no dollar figures set on my trading whatsoever. And it's just mainly out of habit, but I did that in my earlier days because it's just a lot easier. Because 9 pips is 9 pips. You know, it doesn't matter on the money because it's just a measurement of the move. So I would really recommend, if that's something you're worried about, is just completely ignore the dollar figure and look at percentages and price measurements. Who has a discount on Pulver alerts? I'm not sure. You might be able to use code ELITE. I've got no idea what my code is actually. I don't know if it's for everything or if it's just for the Edge Finder, but you can give it a go. Sean says financial advice. Yes. Yeah, I'll take a 30% performance fee, please. You have a fear of winning. That's crazy. I've never heard of that fear before. Yeah, Otherman, that's exactly it. New Zealand US dollar. Yes, I was also looking at that one too. I didn't quite get the retracement I was looking for. I wanted to see a 50% retracement here into the 200. Didn't get it, so there's no entry here for me. Hey, Nick.
I have to follow up on something you said because I thought it was too interesting not to. By the way, it's good to see you, James.
You too.
Euro dollar rest of the year seasonality. So I'm playing with some stuff here, and long term, I'll just tell everybody in the audience here, my goal is to make the Edge Finder so interesting and so useful that everybody just wants to use it because it's just awesome, which it already is awesome, but you can't believe something is awesome because then you won't make it better. So it is awesome, but it can be awesomer. Check this out. So just to go with your thought process on euro dollar for the rest of the year, I wanted to pull up, let me see if I can do weekly seasonality, if it wants to, hold on. You mentioned the possibility of maybe some shift in euro dollar. We'll just do it here. So I was looking at the seasonality for euro dollar. Here is year-to-date performance for the euro in against the dollar in red, right? This line, pretty much nothing but upside movement for the euro dollar for most of this year. I just thought this was interesting that in the back half of the year, we historically, not every year and not perfect prediction by any means, but we historically see weakness in the euro dollar. I thought this might just be an additional thing to add to Confluence, right? If we're looking bigger picture, let's see if it'll work this time. Seasonality, I want to go to euro dollar. And I'm not going to lie, this is like the most exciting chart that I feel like I've added in a while on the Edge Finder because it's so simple and it's so dumb, but it's like it kind of works because seasonality is a real force. So if I'm looking at euro dollar, really great so far this year. Has had an incredible run in line with seasonality. Like we've kind of expected some strength in the euro, but then we typically give back some of that strength in the second half. This is in line too with my thought process. I've heard you also talking about this. A little bit of strength in the dollar could be on the table. We've had a pretty strong round of data, barring and full transparency. We don't have the data for today and tomorrow, which could really drastically change the story, positive or negative. But we've had some really good GDP numbers, PMI numbers, retail sales numbers. Like the US economy is holding up better than expected. And I just thought that was worth adding to the conversation. Like this concept on Eurodollar that you've been talking about, I kind of like it. I mean, I think you may have a larger correction coming in the euro. And what I'd be interested in, I'm sure you're looking for the same, would actually be some technical signs to kind of marry up with that thought process. But I just want to add that because I thought your point was really interesting there.
Yeah, no, I think that's a great point, actually. I didn't even consider the seasonality, but yeah, I think someone in the chat actually said about the export number. And the euro is actually quite expensive. And we've already heard about the ECB verbally talking about 1.2, which we've not quite reached yet. But there is those signs starting to stack up. The euro dollar could maybe be a short at some point soon. So yeah, it's just a case of keeping an eye out.
Yeah. Awesome. And also, guys, he mentioned it earlier, but if you guys are interested in getting access to the Edge Finder, it helps out James if you use this promo code ELITE, kind of an awesome code, not going to lie. But if you want 40% off, we're giving it just for his code for a limited time, just because we have kind of deep dived on it. And I also like your concept about changing your P&L on your screen. Sometimes what I do is I just like log out, like, so I don't see the numbers as much. Like I know I'm in a trade, but if there's nothing for me to do on the trade, I might just log out of the account on TradingView just so I can't see it. But yeah, I mean, my thought process, James, is I think we'll see if I'm right about this, but I think the dollar has upside, and I think that metals will pull back. I heard you talking about that earlier. I think that the stock market could also pull back a little bit on stronger dollar. I'm not necessarily bearish those things, but I just think that you probably have some dollar strength in the mix, and we'll see if that takes place. We've had so far one of the worst years ever for the dollar index. We'll see if we get some rebound on it.
Yeah, no, I completely agree. I mean, the dollar will strengthen at some point in my view, but it's just a case of time. I mean, you know, are we going to have a 2 years in a row of dollar negative? I would highly doubt it. So 2026, I might start pivoting to buying some dollars if it's still relatively cheap around its current price.
Yeah, and if we take a look at, for example, here's just some nominal data on the dollar. I pulled up the economic growth data, GDP growth forecast. We've got selected by default the US. You can compare this to, like, for example, just because we're on the topic of euro, you can see growth rates for Europe are just like little to nothing, right? If we look at, I know this is hard to see on your screen, but 3.8% for US. Then we go into, 2.1, 1.8, 1.1. So US numbers are pretty strong, but then you have Europe at 0.1, 0.3, 0.4, 0.4. Longer term, I think that will play in the interest rate differential. I think that the US interest rates will remain elevated relative to Europe's for some time. And so I do think that should, over the longer term, strengthen the dollar. So we'll see.
Yeah, I completely agree. Is Marco coming on? I don't mind doing a bit longer if you need to take a bit more time away, or I'm happy to do whatever works for you.
Yeah, he's scheduled to come on at 10, so I might just hop in and hang out for a little bit, and then let him whenever he's ready jump into the stream. So I appreciate your time as always, James, for coming on the show.
Yeah, no problem. Thanks for having me.
Yeah, before we let you go, everybody who enjoyed his commentary, James has his own YouTube channel. You can find him FOREX James on YouTube. You can also check out his services. If you are interested in that, go to elitetraders.io. I'll put that in the chat here. elitetraders.io. Check it out there. I think that's the right link. If it's not, James, correct me.
Fine.
Yeah, check it out.
Yeah.
Go find out about the services he offers. And remember, if you want a copy of the Edge Finder, you want to support James, use code ELITE at checkout. James, thanks very much, man, for coming on and hanging out today.
Oh, thank you very much. Have a good day, guys. I'll speak to you very soon.
See you, man. Yeah, guys, always good to have on James again. Very, very knowledgeable both on the technicals and fundamental side. Oh, we do have Marco tuning in. All right, he's backstage. So we'll toss things over to him in just a second. Again, just to follow up on that concept, I don't know if you guys like seasonality as much as I do, but if you're a technical person, one of the easiest ways to corrupt or to lure in technical traders to fundamentals is through the use of seasonality and technical tools that kind of are a hybrid between the technical side and fundamental side. Seasonality, I would call a hybrid between technicals and fundamentals. It's a very easy to understand concept that can also be explained both technically and fundamentally. Let me just clean this up here. Hold on. I want to get there we go. Boom. So what I was explaining with James there was this concept of euro dollar seasonality historically has some weakness in the second or in the last period of the year. A little bit of dollar strength comes into the picture. S&P 500 typically strengthens during the end of the year. I was looking at oil. Oil's all over the place this year. You can see historically we have not really followed too much of the pattern, although we did get some of that strength around this time of year. So just something to think about. Also, let me ask you guys, which is better? This screen? Do you like this screen? Let's say this is screen 1, where you have the magnitude average on top and then the yearly seasonality on the bottom? Or do you like just having the isolated? So let's call this 2. So do you like chart number 2 better? Or do you like chart number 1 better? Like chart 1 being both of these on the screen at the same time? Or chart 2, just the full year seasonality? Let me know in the chat really quick. This would just help me out as I am playing around with these tools behind the scenes. I'm always trying to build these things to be what is most useful to the most number of traders. So just do me a favor in the chat, drop a 1 or a 2. Which one do you like better? Do you like both on the screen at the same time? Or do you like the isolated view? Oh, we do have dollar index. I did not. Oh, this is awesome. So dollar index in isolation, I didn't know we had this data in here. Dollar index expected to have some strength in the month of October, month of November, and then we have a negative month in December. This is the historical 10-year average performance of the DXY. So we're expecting here some strength in September, October, November. We did get a little bit of strength in September. We'll see if that follows through this month and next month. 1 is cleaner. Yeah, I kind of like this. To be honest, I like 1 because it shows you the magnitude here pretty nicely. So I do still think that that's my thought process on the dollar. I think we have upside in the dollar. The technicals are kind of tricky, but we'll see. I don't know. If you're an EdgeFinder user, do me a favor. Always drop your feedback on how we can improve it, because I read every comment that comes on my YouTube channel, and a ton of the comments that come on our socials, like A1 Trading stuff, all across our network. I read comments all the time to try and continuously improve the tool. If you don't have a copy of the EdgeFinder, real quick, let me just do a free plug for you. If you want to try out the EdgeFinder, we have a free version now. Well, that's the wrong link, but you could still enter the giveaway if you want to. It won't really help you yet, but we're doing a giveaway next week, so stay tuned. If you want to try it out for 30 days, scan the QR code on your screen here. And I'll also drop the link here in the chat to where you can try out the EdgeFinder on the free demo version. Give me a second. I'm running the stream solo today. So if you want to try EdgeFinder, usually I have someone who helps me with all this stuff, so I'm a little lethargic today on my stream. There's the link if you prefer to just click it. If you're in the live stream chat, just throw your name in there or throw your email in there, and we will shoot you an email to where you can try out the EdgeFinder, the limited version, for free. Or you can get access to a 30-day paid trial. It is a paid trial, but you get access to the full product for a limited period of time, 30 days. So whatever is your preference, but there is your options. I highly recommend that if you are looking to up your trading, start using the data, man. It really brings clarity to what you're doing. With that said, we are going to now transition to our next show host. Of course, it is the one and only Marco. He's going to be sharing some ideas on what he is looking at here going into the end of the week. So let me just stay tuned. Coming in just after this, check out Marco. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. What has been happening for today? Of course, if you have any questions, any chart requests, you can put it in the comment section. For today, quick glance on the charts. Stocks are up, gold is up, silver is up, S&P is up a bit, and the dollar is kind of up on the day. Not so massive news. The biggest one is kind of for this week, government shutdown. NFP is delayed. So as you can see, NFP is tentative, probably going to be delayed, or I think it's already delayed. What is a shutdown? Well, basically, the US government could not agree on a specific budget, so they had to shut things down until they can agree, the Republicans and the Democrats, and Trump. He's like the third one. It's Trump, Republicans, Democrats. So until they struck a deal, it's going to just be shut down. That means BLS, the Bureau of Labor Statistics, is on pause. That means data releases are coming out slower than expected. That means we probably need to wait for the shutdown to be finished, and then we'll get the NFP print. What we did get, we got the ADP non-farm employment change, and it was quite negative. So the forecast was 52K, previous number was minus 3K, and the actual number was minus 32,000. So quite a big, let's say, news release, or quite a big shock. We also had the manufacturing PMIs, which came in pretty much in line with the forecast. But this was a shock, and this means, or could mean, that 2 rate cuts will indeed happen. If we go to the Fed Watch tool, let's see what is currently priced in. I believe this is in the futures market. They're watching the futures market. So 29th of October, pretty much guarantee of a 25 basis point cut, and 86.7% chance of another 25 basis point cut in December. So we're still pretty much on the same track with the rate cuts as we have been so far. So 2025, 3 rate cuts of 25 basis points. Now, this is my watch list. One new thing that I added is the Aussie New Zealand. I'm considering buy setups on the Aussie New Zealand. I can break it down. If you are, of course, in the A1 Discord, you're going to get this as a signal, but I can break down why I think the Aussie NZD is an interesting currency pair to watch. So I think this will be a nice exercise for me to show you how I use the Edge Finder as well. Now, there are 2 scenarios when looking at fundamental data. There is the short term and there is the long term. So here is what I'm focusing on the Edge Finder. For the short term, it is the Eco Surprise meter. It is the economic heat maps. So if we check for the Aussie, doesn't look good. Short term doesn't look good. New Zealand, let's see, even worse. So only 25% of the data is coming out better than expected. So not quite a nice bias in terms of the short term. So this trade may not be ready just yet. Now let's take a look at the long term. So let's take a look at the GDP for the Aussie. I would say it looks okay. I would say it looks healthy. It's positive. Now for the New Zealand, definitely worse. Negative in some periods, kind of all over the place. If you compare the two, the Aussie long term is more healthy or is stronger. Now let's take a look at the unemployment for the Aussie. Let's also go back the last 2 years, let's see the trend. So the trend is slightly up, but sort of starting to straighten in these last few prints. Let's check the New Zealand. Definitely still rising. So I would say the unemployment for the New Zealand dollar is rising, and it is above 4%. It is actually at 5.2%. Aussie has the advantage. Inflation. Let's see. This one is interesting. For the Aussie, inflation is in a downtrend. It's also quite close to the target inflation. Now for the New Zealand, inflation is actually starting to rise a bit. So it's potentially starting to become a bit of an uptrend. Again, the Aussie wins. So short term, no clear bias. Long term, Aussie is stronger than the New Zealand. Technical analysis looks great. So nice big uptrend, daily chart, very nice momentum. Where is the first major level of resistance? I would say it is at around 1.145, somewhere here. So if we do manage to get in a bit lower, we can have a nice reward to risk, nice swing setup to the resistance level, nice 2-to-1. That's the game plan. So I don't want to buy here. I want to see a bit more of a pullback. I want to see us touch the 20 MA. I want to see us maybe even go back to this level of support. And then I would consider buy setups. Another thing that I would prefer to see, but that is not needed, is I would like to see the short-term data be bullish for the Aussie, bearish for the New Zealand. That would be kind of an added confluence. So putting this one on the watch list, alert is set. One more cool thing with the Aussie, carry trade scanner, AUD, NZD. If you buy, you actually should get positive swaps. At least you're not getting negative swaps. Depending on your broker, you could get positive swaps on this trade. So holding this for 1 month, 2 months, maybe even 3 months if it happens is not a big deal. Stacking up all of the confluences, I like this setup. If you look at the top setups page, again, it's not getting a very clear reading because of the short-term data. So I would need to possibly see the short-term data be a bit more bullish for the Aussie, a bit more bearish or stay bearish for the New Zealand dollar. Building the trade idea, if you're in the A1 Discord, you're going to be notified about this trade signal. You're going to be getting all of the information. I'm going to break down the whole trade so you can learn how I took this setup and replicate it for your own trading. If you want to do this sort of analysis using the Edge Finder, you can also sign up for the Edge Finder with my discount code, which is MARKO. So the discount works for the Edge Finder and for the A1 Discord. So the code is MARKO. There should be the code in the comment section as well, so you can check it out. Let me check the comments. Let me see what you guys are looking at. Let's see. Hey, Slugmeister, what's up? AJ, KOT wants to see AJ. Guys, what's going on with Euro stocks? Traders moving their assets. Haven't checked the DAX in a while. Okay, this is nice. Nice. I actually had a question of buying the DAX here on the bottom, and I completely kind of negated the whole trade idea. I said that I don't personally think it's a smart thing to do because we're just ranging around. But if you did buy it, you would probably make some nice profits. For me personally, I think we're still inside of a range. I don't see a massive reason. I don't see a massive catalyst to go long. Let me check on the heat maps. For Europe, yeah, nothing great in terms of fundamentals. If we do break these highs, I would then consider buy setups. So for me personally, we need to move away from this resistance level, and then I would look for some high probability buy setups. Again, not sure why this is happening. I have checked Financial Juice today. Didn't see anything on the news side that could push the DAX high with this sort of momentum. but again, might be preparing for finally breaking out of this resistance and not getting its bottom slapped by the Nasdaq and the S&P, because so far the US is just crushing the DAX. The DAX had some nice outperformance and then just went to sleep. So we will see. I'll keep an eye out on the DAX. Andre says DXY passing 97.8. DXY is not moving that much. Okay, Aussie CPI was 3%. Marco, hey, FX Bashi, what's up? How's the scalping going? Is NFP already out? No, it's not. NFP got delayed because of the government shutdown. You're probably going to need to wait for them to reopen the government, and then they will resume releasing the numbers, the BLS, Bureau of Labor Statistics. NZD-USD. Okay, so we have two requests, Aussie Yen and NZD-USD. Let's check. Aussie Yen. For the Aussie Yen, it's in an uptrend. To be honest, me personally, I'm being a bit patient on the yen. This week, I keep telling you about the Japan PM elections, poly markets. Elections are in Japan. You have Koizumi against Takaishi. Koizumi is hawkish, Takaishi is dovish. I'm going to wait this one out. Koizumi is most likely going to win, so it's going to be hawkish, which should be bullish for the yen, meaning higher interest rates. If you have been watching the news segment, okay, if you have been watching the news segment, then you would notice that they're looking to raise interest rates. So Bank of Japan is looking to hike interest rates. If the election comes in as expected, I think it's going to happen on the 6th of October. You're going to get the results on the 6th of October. I'm not sure, which is my birthday. So it's going to be on my birthday. Then I'll get more confirmation. So far, I'm a bit neutral on the yen. I'm not sure whether to look for buy or sell setups. I'm also watching USD yen, which I think is just super flat in a range right here. So I'm watching these extremes. If we can break lower or higher, we should break lower because of the cutting of rates in the US and higher rates in Japan. So this should in theory happen, but lately UJ has not been respecting the interest rate differential. This is some of the research that I have done. On the side, you have, of course, the Forex market should move in line with the interest rate differentials. And on the UJ, recently, it has stopped moving according to the interest rate differentials. Kind of happened with the unwinding of the carry trade back in 2024. That's when the correlation kind of ceased. And now it's a bit of a weird, tough market to trade on UJ. If you're wondering what's my stance on the Aussie, I'm bullish. I like the Aussie as a currency. I think it can appreciate, but I do think better bets could be Aussie CAD. Okay, so Aussie CAD to buy, and Aussie NZD. Aussie CAD, I'm already in. If you're in the A1 Discord, you would know that I have trailed my stop loss. So my stop loss is now around 0.909, somewhere there. Running some nice profits, looking to trail my stop loss even further. And I'm looking at the Aussie NZD to buy, as I mentioned at the beginning of the stream. I just needed to pull back a bit more. So if you want to trade the Aussie, I think it's better to look at Aussie CAD, Aussie NZD. Also, the second request was let me just check the comments. NZD USD. Okay. So let's see NZD USD. Well, you can say I'm kind of bearish on the New Zealand dollar, possibly a bit bullish on the US dollar. Quick glance on the DXY, which is pushing up a little bit for today. But I don't think NZD USD is the best thing to short right now. Okay. I'm not sure if it's the best thing to do. Let me check what would the swaps be on such a position. If we go to the carry trade scanner, CNZD USD. Okay, actually positive swaps if you sell, which is good. That's good. I am bearish on the New Zealand dollar. I am bullish on the dollar, but it's not such a great level of conviction. I think the two biggest fiscal sinners right now, first one, the CAD, second one, the pound. Third one could be the New Zealand, but it's not so bearish. And again, the dollar I'm bullish on, but not really bullish. So I'm waiting for a bit more developments, let's say. I think there's better opportunities out there than going short on the New Zealand dollar. Let me check quickly the top setups for the New Zealand dollar and NZD-USD. Bearish, okay. So we're getting a bearish reading from the Edge Finder, which is nice. It's a nice confluence to have. It's a strong confluence to have. But I'm looking for more information, especially on the dollar. You know, I have a bet on USD CAD that the dollar will appreciate, approaching the take profit now, which is nice. I personally believe that we don't currently have a massive catalyst for the US dollar to lose value. Q1 and Q2, we had a massive sell-off, but the catalyst was known. It was Trump, new political regime, new economical regime, closing down of the United States, tariffs. People got scared. People sold US dollars. People sold US assets. That was the catalyst. What is the catalyst for the massive sell-off now? Is it rate cuts? I don't think so. I think most of the rate cuts have already been priced in. And each time Powell speaks, seems like he's hawkish. So you're getting this inverse reaction. You're getting cuts, but the DXY goes up, which is pretty interesting to see. And I think at this point, the USD shorts were definitely overcrowded. Everyone was shorting the US dollar. It was the most popular trade. People thought we were going to explode past 96.4. Usually when the trade is crowded in one direction, the market goes in the opposite direction. So yeah, I am bullish on the USD, but also being a bit careful. We could just remain stuck in this range. You know, I don't think we will get a massive catalyst to sell, but will we get a massive catalyst to buy? Maybe. So far, it's not happening. So if I had to pick a direction, I think maybe a bit more upside, but overall this. Just sort of ranging around. So I'm being careful on my dollar bets. USD CAD, I like the position because I'm so bearish on the CAD. And I'm getting positive swaps on this setup. So I don't mind holding this for 1, 2, 3 months. Okay. So crypto, Bitcoin and Ethereum. Looking interesting. Ethereum, I'm not a fan of. Bitcoin, I like. If we can get some more bullish price action, if we can possibly break out of this flat range, check the top setups. Bitcoin. So bullish in terms of the top setups. That's nice. I would like to see it break I think this is the all-time high. It should be the all-time high. So I would like to see it break the all-time high. Then maybe we can get some buy setups. What I don't want to see happen is getting left behind like I did on gold. So probably going to be a bit faster with my entry if Bitcoin does want to break out. One thing I'm aware of, if you do any research in crypto, you have halving cycles. I think we have already had 3 halving cycles. And this period in the year, this period in the halving cycle, this 4th halving cycle is usually bearish for Bitcoin. It's usually a confluence that to sell or for Bitcoin to stay flat. That is on my mind. Ethereum, I think, is massively overbought. I now know what was the catalyst for this explosion. It was US companies mimicking MicroStrategy, mimicking Sailor, buying Ethereum, artificially inflating their stock price, while the real company is absolute crap. So not a good strategy. It does push the price of Ethereum up, but only so far. What would be the next catalyst for Ethereum to explode? I'm not sure, but I think a stagnation or a bit of a sell-off is more likely. So that's my crypto take. Scalping has been poop in these markets, says FX Bashi. Well, yeah, it can be like that with changing market conditions. Okay, let's see. Pound Swiss, 6th of October is your birthday. Yes, it is. Libra. Yeah, I'm a Libra. GBPUSD. Okay, that is interesting. Can you review the USD CAD in light of the government shutdown? New Zealand CAD. Is Nick lucky or smart? I want to know how you pray because it worked well. Congrats on your biogen. So I think luck, they say luck is where preparation meets opportunity. So if you're prepared and the opportunity arises, meaning a good trading setup, and you have done all the research, then you kind of get lucky and you make a nice percentage on a particular setup. So if you're prepared and you're in the right place at the right time, you're going to do well. What I wanted to cover is USD CAD in light of the government shutdown. From my research, government shutdowns don't have a massive reaction on the markets. Okay. So USD yen does like to sell off when there is a government shutdown. But when the shutdown stops or they reopen, usually UJ goes back to the original level or close to the original level. I'm not concerned. I'm not going to be trading the US government shutdown. I don't think it's an extra trading edge. That's at least what history is telling me. So far, the impact on USD CAD has been minimal. I can see USD CAD is just continuing to grind higher. Take profit is in. I'm not changing anything. I'm just leaving this trade run. So I want to take this time to mention the sponsor of today's video, which is DNA Funded. Okay. So if you're looking to increase your trading capital, I highly urge you to check out DNA Funded because they are a reliable prop firm ran by professionals. So this is a 50K challenge account I have for testing out ChatGPT trade signals, which is a series I'm doing on my channel. So far, it's a bit negative, but we have 2 trades running, one on UJ buy and buying the S&P. Buying the S&P has been kind of a great trade in 2025. But anyway, so if you're looking to expand your trading capital, you can get 25% off with the exclusive discount code for you guys watching the streams. The code is A1 Live. Okay. So exclusively for you guys watching the streams every day, you can use this code. You can get 25% off. As I always say, with a prop firm, the 2 most important things are that the prop firm is being ran by professionals and that they will actually honor your payout. So they won't just run away with your challenge fee. And DNA Funded is one of these safer prop firms. They have competitive pricing, but they're not too cheap. If a prop firm costs like 70% cheaper than all of the competition, you know they're a scam. So out of all of the reliable prop firms, the big ones, you can get kind of the best price with our discount code on DNA Funded. So check it out and let me know how it goes if you're in the A1 Discord. So going back to our charts, I want to talk about the pound. I told you the 2 biggest fiscal sinners, okay? The 2 biggest fiscal sinners are the CAD and the pound. I'm already heavily selling the CAD, Aussie CAD, USD CAD, Euro CAD. For the pound, I'm being a bit patient. I'm looking at things like GBPUSD. I'm looking at this level of support. I want to see a break lower, and then I would consider sell setups. Because I don't want to get stuck in a short, we can very easily stay range bound, stay flat for a long time. So alert is set, and I'm looking at the breakout of the level. Euro GBP is another one I am considering. Already had a nice, where was it? Here, nice buy setup on this one, which was a signal in the A1 Discord, by the way. But right now, we're very close to a resistance level. So do I want to buy right here? Absolutely not. I don't want to get stuck buy this resistance level. I don't want to pay negative swaps. Swaps are pretty expensive if you buy Euro GBP. So I first want to wait for a breakout. Yes, we're forming sort of a cup and handle, which is a bullish pattern. But until we actually break out, I cannot do much. So that's my GBP. That's my GBP analysis. Just a quick run through the eco surprise meter. So these are the short term. These are the short-term results. Let me tell you my long-term analysis. That I use the GDP, I use the unemployment, and I use the CPI inflation. USD neutral / bearish long-term. Pound bearish. Euro bullish. Yen neutral. New Zealand bearish. CAD very bearish. Aussie bullish. Swiss haven't done work on the Swiss right now. So this is the short term. Now I told you the long term. What would be the best to buy or sell? Best would be to sell the pound, sell the CAD, buy the euro, buy the basically maybe Aussie, but short term it's kind of mixed. So euro would be the strongest currency right now, and it's all relative, right? You don't need a perfect score. You don't need 100% score to buy the euro and sell the CAD. You just need one currency to be stronger relative to the other currency, if that makes sense. So euro is at 50% short term, while the CAD is only at 13. That means relative outperformance by the euro of, what is it? Let's say around 37%. You can view it like that. And we're kind of approaching the end of the stream. So if you have any final chart requests, let me know. I'm going to run through the comments, see if I missed anything. So GBP Swiss, that's the one I definitely missed. So let's do GBP Swiss. GBP CHF. This one, checking the top setups quickly. GBP Swiss. Neutral. Chart is kind of flat. I'm not looking for anything here. The pound, I'm really bearish on. For the Swiss, haven't done the research needed yet. So I cannot do anything because I don't want to blindly just sell Swiss GBP Swiss because the pound is weak. But the overall signals are not giving me. So the overall signals are not giving me a lot of confidence to sell this. If we can maybe break out lower, get a nice downtrend running, and if my Swiss fundamental analysis points to bullish, then I may be interested. So far, if you want to play short pound trades, I would say it's better to sell the pound dollar or sell euro pound or buy euro pound. I think that's a better play. You guys want to see gold again? Okay. DXY moving up as expected. Indices short. Gold sell tight stops. Short-term trades. Why is DXY up? Quick glance on the DXY. I just think the positioning of most traders was bearish. I think most of them went into the Fed event, the interest rate decision on the 17th, with a bearish stance, or the sell the dollar stance, that Powell was going to be super dovish, that he's going to produce crazy rate cuts, 50 basis points. That didn't happen. Powell did produce a 25 basis point rate cut, but he sounded hawkish. He flagged inflation as a concern. They keep flagging inflation. If you're watching Financial Juice, if you're watching the release of news, you're going to see they mention high inflation quite a lot. There's a reason. If you look at the CPI, it has consistently been above target. Is the target 2%? I don't think so. It's more like 3% now. We never really reached 2%. They always say, we will reach 2% in 1 or 2 years. And we never do. So inflation is still being a very large problem, right? They're talking about it. They're concerned. They may not want to cut as aggressively because of the inflation being above target, because of the CPI being at 2.9, which is quite high. So I think you're getting this bullish reaction because everyone is expecting dovish Powell and rate cuts. The exact opposite thing happens. We go up. I don't know specifically why we're moving up today, but my forecast short term is that we do go up a bit more, but generally range around, because for a large move up or a large move down, you would need a massive, massive catalyst. So far, I have not seen any indication of a massive catalyst to buy or sell the USD. Okay, so gold is going to be the final one for today. Gold I'm looking to buy, silver I'm looking to buy. They have been running away from me for quite a long time, so we cannot seem to get a pullback. Makes sense because the inflation is pretty high. You have Trump's big, beautiful bill in 26. You have rate cuts from the Fed. You have quite a lot of stuff. You have the commercial banks, big banks, institutional banks increasing the money supply, thus making inflation higher. People are starting to notice. People want to buy gold. They want to protect themselves from inflation. And you have a massive, massive explosion. I think from these lows, we're up 16%. That's quite a lot. Silver is even a better performer, if I'm not mistaken. Let's say from here, 23%, massive. Do I want to buy right here? No. Do I want to sell? Absolutely not. So I do want to buy, but I want to buy at lower levels. Maybe I can get into an initial feeler buy setup here and then get in on some more buy setups at 3.632. So that could be a play. Silver, I would probably look to get in at 42.9 maybe. You know, if we touch the 20 MA, pull back a bit, you get a better reward to risk. You're not getting in with all the suckers right at the top. And it's generally a better option, a better trade, getting in on a pullback instead of trying to chase the price. So that's my short gold analysis. Final question. What platform can you recommend for beginners for Bitcoin crypto investment? So for investment purposes, I think it's a good idea to check the A1 trading website for recommended brokers. Depends on which country you're from. They should have a good broker for you. I recommend Interactive Brokers. I use them for investments for my S&P investment. But again, I'm in Croatia, so Europe might be different for where you live. So yeah, you have the link in the comment section. Make sure you check it out for all of the brokers that we recommend. That's it. I will see you guys tomorrow. NFP is delayed. And let's do some more setups. Again, just selling the CAD, selling the pound, selling the New Zealand potentially, and looking to buy gold, silver, and the Nasdaq. So that's it. See you.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.